In this video, we are going to answer some of PropFirm Algo's users' questions. This is the first user's question. Is the RR ratio calculated between the previous high to previous low? Second question. While having the safety risk enabled, if it will not allow me to trade because of, let's say, the RR, the risk to reward, is 1 to 1.5, just below the acceptable 1 to 2 risk to reward, let's say I see a really good buy or sell signal that is really strong according to my strategy. Should I turn off that safety risk to reward toggle in order to open the trade? Is this right? And is there no other possibility for this case? This is an algorithm that very much so does not see the highs and lows that we humans may see. So, what happens when we have the RR manager on true? It calculates the previous highs and lows automatically for you, plus calculates your lot size to stay within the inputted risk percentage, adding the discipline you need in order to find long-term profitability. In the case the RR manager does not allow you to enter the trade, you will get a message saying insufficient risk to reward ratio. So in case you see a setup with your own eye and want to disregard the auto risk to reward manager, here is why we added flexibility on the version 2.0. So what do we do in this case where we want to take the trade, but it says trade not allowed due to insufficient risk to reward ratio? We're clicking buy and this pops up. Here, for the more experienced trader, is where you can toggle off the risk to reward manager. Whenever you're experiencing this issue and want to use your own stop loss value, by using the cursor, you will be able to simply input the amount of points you wish to have your stop loss by using the crosshair on MT4. Then, with having the risk to reward manager on false, it will use the stop loss value in points which you have inputted, plus the risk amount to auto-calculate your risk for you as a backup option. Here is the next user's question. I'm a price action trader, so the price drives my strategy. Order blocks, imbalance concepts, highs, lows, etc. What do you recommend according to this? To have that safety toggle on or off? And here's the answer. It's recommended to use the risk to reward manager set to true for those traders who struggle with disciplinary decision making, like keeping strict risk to reward management in place. Those who can't stay on course of following rules like only trading when there is a risk to reward ratio 1 to 2 or higher. These traders should always have it on so they can learn to see what proper risk to reward looks like. But if you are disciplined yourself and can follow your trading rules, then you can turn it off and use your own risk to reward, TP, and stop loss, and the risk manager will calculate your lot size to equal your risk appetite. Here are some examples on why the risk manager will deny some trades and how to work around it. These are the signals on MetaTrader, and before we carry on, I just want to show you guys the power of these signals. So here on these first signals, we have 8,188 points. Here we have 5,150 points on the next. Then here we have 8,351. And in this move here was about 11,000 points. And in the reality of trading, not every signal is going to give you perfect setups like these. So how can we protect our account from these bad trades? And how can we ensure that we have a favorable risk to reward? So far, we're up 51,930 points in this example. But which trades would have been accepted by the risk manager? And which trades would have been denied? Let's go over it and show you how the risk manager calculates the highs and lows to give you an automated risk to reward ratio in these next following examples. Here on this buy signal, the risk manager would have denied this trade, mainly because the stop loss would have been placed right here, which is the previous low being detected by the zigzag indicator. Right here is where we humans might see the previous low, but you can clearly tell that the zigzag did not detect this, so this is why the trade would be denied by the risk manager. And luckily it did, because it would have saved you from taking this trade. Also, for anyone using indicators that claim they use order blocks, imbalances, and price action concepts, here is a question for you. Why use all of that to then still need to adjust settings, which can again overcomplicate everything? When PropFirm Algo does all the order blocks, checking of imbalances, detects true price action conditions, all within its code for you. So all you have to do is see the signal and enter. Here on these settings, the only thing you need to worry about is experimenting with which one out of these 4 signal setups do you prefer over the other. Now to the next user's question. What time frame works best or is recommended for your software? Yes, I know that it works on all time frames, but from the experience of the developers who created it, which time frame is better? And now here's the answer. Make sure you are using top-down analysis. Check the high time frames prior entering on the lower time frames. If you are interested in taking 1-minute setups, it's important to check the higher time frames first. For example, don't take a 1-minute buy setup on the S&P 500 when zooming out shows price is on the daily high or the 4-hour high, or in other words, at a clear level of resistance shown on the higher time frame. First, wait for price to come to these areas, then zoom in. Look for a downtrend confirmation, then green candles on the 5-minute or 1-minute at the 4-hour resistance zone, and then wait for the retracement for price to hit the institutional entry lines, which activate the entry signal. Vice versa for longs for higher probability trades. Do not obsess of staying on one single time frame, because it is equivalent to being zoomed in on an atom, not knowing what you're looking at, thinking, hey, I'm observing some part of a bull here. Yep, this is a bull here. And nope, sorry, this is a bear. Boom, money gone. And that is the learning curve of being a trader. The ability of being a true self-analyst of one's decisions across any environment. And now for this next question. Inside the indicator settings, what does the main count really mean? The number of signals given? The main count is the amount of signals you want to have during any given trend. It will control how many retests after the confirmed trend will be considered as a signal entry. Notice, the input value here is 3. This is why our chart visually will only give us 3 signals per signal group per trend. So changing this to 4 will give us 4 A signals and 4 B signals, and changing this to 4 will then change the amount of C and D signals, meaning only 4 C and D signals will be shown, and only 4 A signals and 4 B signals will be provided per confirmed trend. Here's the next question. Also, the indicator, I'm using the default settings with A and B institutional entry lines enabled. What is the real difference between them? Which one should I choose when entering a position? Does one have higher importance than the other? Or I have to wait for both to be touched by price to enter? In which case, would I enter the lower for buys and the higher one for sells? And here is your answer. These signals are levels of retracement on any given trend, is how far of a pullback or the retracement is during any given trend. It's recommended to try all of them and possibly make each entry line a custom color. This way, you can quickly tell which entry line is A, B, C, or D with one glance. And over time, have you decide which of these 4 setups works best for your trading style. And here's the last and final question from the same user. This is related to the previous. What is the purpose of 4 institutional entry lines in total, actually? Let's say, why should I enable 3 lines instead of only 1, for example? Again, each entry is a different set of conditions that repeat itself over and over in the market. The conditions for A are not the same for B, and so on and so forth. So you have the opportunity to use and develop which one of the retracement levels on any given trend resonates more with your trading style. And the only way to find that out is by using it over time and familiarizing your own decision making while using these tools. Which, by the way, if you haven't already taken advantage of this sale, each month the discounts get lower as they get closer to 1,000 members. So hurry up now before it's too late to even join. Don't miss out on the current available discount before doors close entirely. So that's all we have for today. Thanks so much for watching the video. Please make sure to like and subscribe. Leave a comment below if you have any questions and for a chance to win a one-time 50% off discount. PropFirm Profits 2023. Let's go.